In a recent video, we looked at the net investment income tax, which is an additional tax imposed on investment income when your adjusted gross income exceeds certain levels. In this video, we look at a similar tax that is imposed on relatively high wage and self-employment income. I'm the Tax Geek, and here is the additional Medicare tax, oversimplified. The additional Medicare tax is a tax of 0.9% on wages and self-employment income. The tax is levied on wages and self-employment income exceeding $250,000 for married couples filing jointly, $125,000 for married people filing separately, and $200,000 for all other filing statuses. Unlike the regular Medicare tax, which is matched by your employer, only the employee pays the additional Medicare tax. When the tax is paid on self-employment income, it is not doubled, unlike the Social Security and ordinary Medicare portions of the self-employment tax. All employers are required to withhold additional Medicare tax when wages paid to any employee exceed $200,000, regardless of the employee's intended filing status. This can result in more or less tax withheld than is necessary to actually pay the tax. This is best demonstrated with examples. Jerry and Alice are married and file jointly. Jerry has wage income of $225,000 and Alice is a homemaker. Jerry's employer withheld additional Medicare tax of 0.9% of Jerry's wages that exceeded $200,000, amounting to $225. But because their combined wage income was less than the $250,000 threshold for a married couple filing jointly, they are not liable for additional Medicare tax and will have the withholding apply to any other taxes they may have. But suppose Jerry filed separately from Alice. In this case, Jerry would be responsible for additional Medicare tax on his wages that exceeded $125,000, or $900. However, Jerry's employer still only withheld $225 on his wages that exceeded $200,000. Jerry would be responsible for the $675 shortfall, paying it as an additional tax on his Form 1040. But now let's suppose that both Alice and Jerry are employed and file jointly. Jerry has wages of $115,000 and Alice has wages of $175,000. Neither had sufficient wages to trigger additional Medicare tax withholding, but their combined wages of $290,000 exceeded the $250,000 threshold for a married couple filing jointly by $40,000, yielding an additional Medicare tax of $360. Since there was no additional Medicare tax withholding, they would be liable for the entire $360 as an additional tax. So let's go ahead and see how this is reported on the tax return. All taxpayers liable for additional Medicare tax must file Form 8959, even if their additional Medicare tax withholdings are the same as their actual additional Medicare tax. If additional Medicare tax was withheld from your wages, it is combined with your other Medicare withholding and shows up in Box 6 of your W-2. The purpose of Form 8959 is twofold. The first four parts calculate any additional Medicare tax, and Part 5 separates the additional Medicare tax withholding from the regular Medicare tax withholding. There are three different calculations for additional Medicare tax, one for regular wages subject to Medicare tax, one for self-employment income, and one for wages covered by the Railroad Retirement Tax Act. For the sake of oversimplification, this video will only be concerned with Part 1. Let's fill out the form for Jerry and Alice, using the first scenario. Here is Jerry's W-2, just for reference. On Form 8959, Jerry enters the amount from Box 5 of his W-2 on lines 1 and 4 of the form. He then enters $250,000 on line 5 and subtracts that amount from line 4. Since line 5 is greater than line 4, 0 is entered on line 6. Since 0 times 0.9% is still 0, he enters 0 on lines 7 and 18. Jerry then skips to Part 5. He enters all the Medicare tax withholding from Box 6 of his W-2 on line 19 of Form 8959. The amount on line 1 of the form, which is also the amount in Box 5 of his W-2, is carried to line 20 of the form. This amount is then multiplied by 1.45%. This amount is his regular Medicare tax of $3,263. He subtracts this amount from his total Medicare tax withholding of $3,488, giving Jerry the $225 calculated in the example, which is entered on lines 22 and 24. The amount from Part 5 of Form 8959 is then entered on line 25C of Jerry and Alice's Form 1040, and is treated just like his other withholding. Now let's see how things change using the second scenario. Part 1 is completed as before, except that on line 5, Jerry enters $125,000. Subtracting line 5 from line 4 now yields $100,000, which when multiplied by 0.9% comes to $900, which is now entered on lines 7 and 18. Since his Medicare tax withholding is the same, Part 5 is the same as the previous scenario. Now the additional Medicare tax from line 18 of Form 8959 is entered on line 11 of Schedule 2, and that amount, along with any other additional taxes he may have, is totaled and entered on line 23 of Jerry's Form 1040 as an additional tax. The additional withholding from Form 8959 remains the same on line 25C. Of course, his income tax significantly changes as the result of his filing separately from Alice. And that's the oversimplified rundown on the additional Medicare tax. And as always, there are details I didn't cover in this video. Additional information and resources can be found in the video description. Please like the video if you found it informative and share it with anyone else who could find it useful. Subscribing to the channel and clicking the bell is the best way to have new tax geeky videos delivered directly to your feed. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thank you for watching, and I'll be back soon with more of your taxes oversimplified.